Is the Coca-Cola and Pepsi duopoly in trouble? Hey everyone, my name is Lorenzo and my goal is to help you better understand the dynamics of the stock market and make smarter investment decisions. Right now, the two beverage giants are heading in very different directions. Coca-Cola stock is still growing at a steady historical pace, while PepsiCo is facing some headwinds and starting to decline. What's behind this divergence? A key difference lies in their product portfolios. Without diving too deep into Coca-Cola's incredible profit margins and its bottling business model, the main point is PepsiCo has a much more diversified portfolio. And while diversification is usually a strength, helping reduce risk, in this case it's actually becoming a liability. Products like snacks, chips, and cereals, which set PepsiCo apart from Coca-Cola, are under increasing pressure. The spotlight on unhealthy foods, high sugar content, and especially the rise of weight loss drugs like Zepbound from Eli Lilly and Wegovy from Novo Nordisk is starting to change consumer behavior. These drugs are already contributing to a drop in demand for high-calorie snack, and that's bad news for PepsiCo. If you're curious to know more about weight loss drugs and want a deeper look into Novo Nordisk, check out one of my recent videos. But let's go back to the main question. Why could the Coca-Cola and Pepsi duopoly really be in trouble? Because of Campa Cola, a surprisingly strong new competitor in India's soft drink market, directly challenging both American giants. Back in the 70s and 80s, Campa Cola was actually the market leader across much of India, until liberalization in 1991 opened the doors to foreign players like Coca-Cola and Pepsi. Originally created by the Pure Drinks Group, Campa Cola was a pioneer in India's soft drink industry. They launched during a time when there was no foreign competition and positioned themselves with the patriotic slogan, "The Great Indian Taste." But once Coca-Cola and Pepsi entered the market in the 1990s, Campa Cola's popularity faded. By 2000, they had closed their daily bottling plants and offices. A small amount of the drink was still produced in Haryana in 2009, but it had almost completely disappeared. That is, until 2022, when Reliance Industries acquired Campa Cola for 22 crore rupees, about $2.6 million US. Does that name sound familiar? Yes, Reliance Industries, the massive conglomerate led by the richest person in Asia, Mukesh Ambani. As I mentioned earlier, Ambani has officially entered the Indian soft drink market with the relaunch of Campa Cola through his fast-moving consumer goods arm, Reliance Consumer Products. And he's not just dipping his toes in, he's diving headfirst into the competition. Campa Cola is now priced dramatically lower than its rivals. A 200 milliliters bottle sells for just 10 rupees or about 12 US cents. That's almost half the price of similar offerings from Coca-Cola and Pepsi. To put that in perspective, while Coca-Cola and Pepsi typically sell 600 milliliters bottles for around 40 rupees, Campa Cola is drawing in price-conscious consumers by offering 200 milliliters for 10 rupees and 5 milliliters for just 20 rupees, around half the price of the American giants. And this pricing strategy is already bearing fruit. Since its comeback, Campa Cola has quickly captured double-digit market share in several key regions of India. Reliance hasn't revealed exact sales numbers, but the trend is clear. This underdog is on the rise. In fact, in January 2025, Reliance projected the Campa Cola's revenue would soar by 150%, reaching 10 billion rupees, about 120 million of US dollars, for the year ending March 31st, 2025. Just 3 years ago, Ambani paid only $2.6 million for the brand, and now it's generating $120 million in annual revenue. That's an impressive growth. For context, Coca-Cola's local unit in India reported revenues of 47 billion of rupees, or about 566 million for the year ending March 2024. Campa Cola is now available in multiple flavors like orange and lemon, and it's positioned as a budget-friendly alternative to Coca-Cola and Pepsi, which have been present in India since the 1990s. But the competition is heating up fast. Both global giants are feeling the pressure. In response to Campa Cola's rise, they've cut prices, launched new variants, and expanded their distribution networks across India. The current market share in India's soft drink space is divided into Coca-Cola leading with 55% thanks to brands like Coca-Cola itself, Thumbs Up, and Sprite. PepsiCo holding around 30% with Pepsi, Mountain Dew, and 7-Up. And now Campa Cola is carving out its place with 10%, a massive gain for such a recent relaunch. To support this rapid growth, Reliance is ramping up production. In February 2025, the company opened a new bottling plant in Assam, in eastern India. Still, there are challenges. Disposable income in many parts of India remains low. What might seem like a cheap 12-cent drink in the West is not necessarily affordable for daily consumption in India. Meanwhile, Coca-Cola is adapting fast. They've introduced no-sugar versions and even cut the price of their classic Coca-Cola to 15 rupees in select regions. This aggressive move had Coca-Cola post double-digit volume growth in India during the January-March quarter, although specific market share gains haven't been revealed. The real concern, however, isn't just about the present, it's about future growth potential. And as Bloomberg recently highlighted, that's where things could get even more complicated. Let me show you a quick clip.
It is going to be a very important market for the two cola giants.
Definitely. India is becoming a strategic market for both cola giants, Coca-Cola and Pepsi, partly because of the slowdown that it's seeing in its primary markets in the US, be it due to the presence of GLP-1 drugs, be it due to consumer pullback, or due to tariff-related headwinds that have led to Pepsi cutting down its guidance for the year. So for both these consumer companies, which continue to see growth even as Ambani's presence comes in, they're going to be focusing heavily on the India market. For Coca-Cola, India is their fifth largest market so far.
So, Vicky, talk to us about Reliance's strategy. Is it the same strategy it brought to telecoms and media to the cola business?
Definitely. It's the exact same strategy that Ambani has been using across his industries. In 2016, it disrupted the telecom sector with the entry of Jio, which essentially offered free data to billions of Indians, right? And it's now disrupted the media industry with the entry of Jio Hotstar, which is essentially a rival to Netflix and Amazon. So here they're disrupting the market with a very cheaply priced cola. And India, which is a very low disposable income economy, 12 cents can mean a make or break difference for most of its consumers. That's also caused, Reliance's entry has also caused some of its rivals, including Coca-Cola and Pepsi, to either cut prices or to bring in similarly priced newer variants so that they can also get in on the game at 10 rupees or 12 cents. Some of its rival companies in India have had to readjust their retail network and as well as build more chilling equipment. So industry insiders also see Reliance's entry, Ambani's entry as pushing the market to grow further.
As mentioned earlier, and as Indian analysts are pointing out, the real concern for Coca-Cola and Pepsi isn't about the short term, it's the long-term picture that could be problematic. Because India is a critical market for future expansion. With nearly 1.5 billion people, it's now the most populated country in the world. Meanwhile, both Europe and the US are mature, saturated markets where it's becoming harder and harder to grow. So let's look at the numbers to understand how the rise of Campa Cola could impact the American giants. In 2024, Coca-Cola's global revenue reached $47 billion, while its Indian revenues accounted for $2.25 billion, roughly 5% of the total. For PepsiCo, global revenue in 2024 hit $92 billion, with the Indian market contributing between 1 and 1.5 billion, or about 1.1 to 1.6% of global revenues. At first glance, these seem like small percentages, so why worry? Because even if the revenue share is still limited, India is seen as a high-growth, high-potential market. Any slowdown in Indian operations, especially when driven by an aggressive local competitor like Campa could impact on future stock valuations, including multiple compression like the PE ratio. Between the two, Coca-Cola appears more exposed with a larger share of its revenue coming from India. It will be interesting to watch whether their strong global brand and aggressive price-cutting strategy will be enough to slow down Campa-Cola's momentum. And here's something even more intriguing. Campa-Cola isn't stopping at India. In February 2025, they made their first move beyond Indian borders, entering the United Arab Emirates. So, will Campa-Cola truly shake up the global soft drink market? Or will Coca-Cola and Pepsi manage to defend their moat and stop this Indian challenger from growing further? And if you're watching from India, have you tried Campa-Cola? What did you think? How does it compare in taste and flavor to Coca-Cola or Pepsi? Let me know in the comments below. I'd love to hear your perspective. And if you liked the video, don't forget to click the like button and subscribe to the channel. I hope to see you soon.